A very good afternoon and welcome to HYCM's workshop with myself, Giles Coughlin, Chief Currency Analyst. It's very lovely to welcome you here. Looking forward to taking us through the following session. We've got a lot of learning points. There's plenty to learn. For those of you who are regular, you'll know the score that as we go through this workshop, as I'm talking about different entries, exits, different instruments to trade, the whole idea of this workshop is that you look over the shoulder of someone who has a professional trading background, you see how I make my trading decisions, and over time you can use that to improve your own trading decisions. What this isn't, it isn't a signal trading service. So just to be aware of that, particularly if this is your first time to the workshop, it may be confusing potentially. So just wanted to make that clear from the outset. Now, when we look at this workshop, we also have a special focus today, and I'm going to give you a special focus, which is a technical focus about how to spot a decent pin bar. I'll explain to you what that is and how to spot a good one. Spotting a good pin bar is harder than you might think, and often people make a few simple errors in spotting pin bars. I'll show you how to avoid those simple errors and to really pick the high probability pin bars. Great, without further ado, I'm going to start the session. Now, what I really like to do is I like to reinforce this concept, because this is probably one of the most helpful concepts for you as a trader. Whenever you're trading currencies, you want to pair a strong currency against a weak currency. Just in this diagram, you see a strong arm against a weak arm. We would expect the strong arm to beat the weak arm. In the same way, we expect a strong currency to move in a more simple and obvious direction against a weak currency. So whenever we're trading currencies, we're trading currency pairs as a general rule, and we want to pair strength against weakness. So I'm going to give you an example. There's a trade that I'm in and I've added to my position, and I'm going to show you how I entered this trade and just run it through with you. Now, you can see here, I'm looking at the New Zealand dollar, Canadian dollar currency pair. Now, there is reasons for New Zealand dollar strength now. And the reasons for that is that there was some business confidence data out this week, which showed high levels of business confidence in New Zealand. And in fact, the levels were so high that 3 investment banks from the Australia and New Zealand region have upgraded their interest rate projections for the RBNZ. They expect the Reserve Bank of New Zealand to now increase interest rates this year. So that is a very quick interest rate projection change. Now, that means whenever a central bank raises its interest rate, that means the currency gains in value. Think about the interest rate. When that goes up, investors around the world want to move their currency into that country. And if you're going to move your currency into that country to benefit from the higher interest rate, what do you have to buy? You have to buy that currency. Demand goes up, the value of the currency goes up. So you can see with this very good business confidence data, and with the expectations that the RBNZ will raise interest rates sooner, we've seen strength in the New Zealand dollar. Now, decided to pair it against the Canadian dollar. The Canadian dollar has seen a lot of strength since the Bank of Canada projected, brought forward its tapering purchases and projected interest rate hikes coming in 2023. Now, it did that from the mid of April. So we saw that the Canadian dollar gained against almost all currencies. And if you just look at the Canadian dollar here, you can see in the currency strength meter, look, the Canadian has been one of the strongest currencies. And that strength, see, it came in mid-April. See the way that the Canadian dollar has been strengthened? That better outlook for Canada has been priced in now. We also saw upside in oil, that was supporting CAD. So CAD is due a little bit of a pullback. Whereas the New Zealand dollar, despite a pretty good outlook, have been relatively weak. So I'm expecting a price catch up between the New Zealand dollar and the Canadian dollar currency pair. So that's why I'm I'm long sort of from around this 0.8650 region. This was building up, and in fact, if you are a member of Financial Source, you'll see that one of the trade ideas that we put up was a long New Zealand dollar CAD position at market on the 23rd of June. So this, you can see right going back a couple of weeks, this build up has been growing and growing and growing. And now we see that finally those fundamentals are playing out in the marketplace. New Zealand dollar CAD upside. The target is into this key area here, just in that 0.8800 region. That is the target because that is also overhead resistance. We also have the 200 exponential moving average. So that's what we would expect price to stall. Now, I've added to this position. I'll show you how whenever you have a currency and it's got a strong bias, you can add on a momentum play. Now, I've added on this momentum play because you can see that price hasn't made a higher high, but there's a hidden bullish divergence here. You can see that price has stayed flat, whereas the indicator has moved lower. So lower lows, ideally higher highs, but flat is good enough, indicates further upside. So I've taken an additional position earlier this morning, which is now nicely in profit, and I'll see how price reacts around that R1 resistance point, ultimate target up into that 8.8800 region. Strength against weakness. Here's a really good example of it. We can see that there was reasons for this New Zealand dollar strength, and those reasons are playing out now, and you can see the New Zealand dollar gaining against the Canadian dollar. Now, one other little trick that you can do is if you want to look at the diverging outlooks between two different currencies, if you just put their bond yield spread on. So I'm just putting the bond yield spread on here between the New Zealand dollar and the Canadian 10-year bond yield spread, and you'll see, you just look at this on a daily chart, you can see, look, do you see how price carefully tracks the New Zealand dollar, Canadian dollar 10-year spread? As the bond yield spread rises, what that's telling you is that the outlook for New Zealand is better than Canada. So when the bond yield spread, now this is the New Zealand 10-year bond yield. So whenever a government wants to borrow money, they will issue what's called a bond. Because if a government wants to borrow money, they can't go to a bank because of the huge amounts of money involved. So they issue what's called bonds. And the bond yield spread is the difference between the 10-year yield and the Canadian 10-year. So here's the New Zealand 10-year yield, 1.67. And here's the Canada 10-year yield, 1.28. And the bond yield spread is just the difference between those two. So when the bond yield spread is rising, that means the outlook for New Zealand is better than Canada. And do you see how the bond yield spread rises? Do you see how the price rises with it? Do you see how rising bond yield spread, rising currency, falling bond yield spread, falling currency? That's how you use the bond yield spread. And look what we've seen here. Do you see that divergence? Rising bond yield spread, but falling currency. So one is going to catch up with the other. And we can see here that the New Zealand dollar, Canadian dollar, we're expecting that to catch up with the bond yield spread. Indeed, it has near-term target up into that 0.8800 region. That's the obvious place that we want to take profit, into that 0.8800, and that will be job done. Nice little cheeky quick trade, New Zealand dollar, Canadian dollar, very nice outlook. You can see here, if you're not long in this, there is potential still to go long. So I would favor upside from any retracements back down to that 0.8700 region. I expect to see upside. You see that you've got the trend line, you've got a break of that trend line. That technically is a probable trend change, and expect any breaks lower to find buyers as long as fundamentals remain the same. If you're ever unsure on the fundamentals, just use the bond yield spread, because the bond traders will let you know what they're thinking about the outlook for the currency. And as you can see, the price tracks the bond yield spread very, very closely. And you can see that where there's a divergence in the bond yield spread, you can see that the currencies eventually move in tandem. So you can see here there's a bit of a divergence. Price was moving lower, the bond yield spread moving higher, we were expecting price to move back up to that bond yield spread. It started its way up. It could well move higher, but generally speaking, you look for profit taking in key overhead resistance points, and that's generally where you find it. So that's a key lesson to learn. Now, I also want to teach you something else, and this is a really good learning point, and I'll show you. And now it came to me, there's a couple of trades that I've taken recently. Okay, I've taken a euro US dollar short and a gold long, and I'll just show you. Now, a pin bar is a candlestick that protrudes out from price. So let me show you what a pin bar looks like. This is a pin bar. Do you see it's got a small body and a long tail? It's called a pin bar. Now, many people will look at these pin bars and they'll go, oh yes, I see what a pin bar is. That's a pin bar and that's a pin bar. Now, these two pin bars are not technically valid. Now, there are times and places to take what I call bad looking pin bars, but this is a technical lesson and I just want to show you what a good pin bar looks like. A good pin bar will have the body close within the body or above the body of the previous candle. So do you see this inside bar here? Do you see that bar there? Do you see how the body closes inside the body or above the body of that previous candle? That is a valid pin bar. So this, the body closes within the body of the previous candle. That is a valid pin bar. And you see how that sends off price moving lower. And in fact, that's called a false break pin bar because you've got an inside bar, false break, and pin bar. So when you're looking at a pin bar, you want to see like here, okay, this is a short one, but you can see the body is within the body of the previous candle. So you see this, now that is a false break of an inside bar, but just in terms of a pin bar, do you see how it's not closed within the body of the previous candle? The best ones close within the body of the previous candle. So this one here, this was on the Friday's NFP data. You can see that that's a decent pin bar. The body is within or above the body of the previous candle. The tail's a bit short, but you can see it's got a bullish close. Now, the best looking pin bars, and there's a good one here for me to show you on the pound Australian dollar pair. So let me just call this up. There's a good one here that I saw earlier. Now, you can see here, we've got a nice trend line. Okay, and you can see here the body of that bar closes within or above the body of the previous candle. There's space to the left. You can see there's a false break. People were going short on the RBA minutes yesterday, and then it snapped back up. All those sellers have had to reverse their position, and this is a pin bar that is signaling prices of a move up to that 1.8500 region. So that pin bar, you'd expect that to break to the upside technically and move up into that overhead resistance area. So this is not a valid pin bar. Yes, it's got a long tail. Yes, it's got space to the left, but see how the body doesn't close within the body of the previous candle? Here is a valid pin bar. The body closes within the body of the previous candle. It's bearish. It's selling all the way into the close, and it triggers off a low in price. You can see here, this is not a valid pin bar because the bar is not within the body of the previous candle. Let's keep going along. Neither is that valid because it's not within the body of the previous candle. The best pin bars are within the body of those previous candles, and they tend to trigger off a rapid fall in price. So here's a pin bar. It's just within the body of the previous candle, and then price moves lower. So the very best pin bars look like this. We'll go back, let's go to the pound and we'll have a look. I'll show you the very best ones. They want to be the same direction that you want to travel in. So for instance, let's show you a good one. We'll go to, let's go to the weekly chart. See, there's a really strong one that's really obvious. Looking for a really good, and often your times to use these It's when you get a strong fundamental shift. So when you get a strong fundamental shift in price and a fundamental reason for price to move one way or the other, it can be a really good time to execute a trade when you get these kind of really strong pin bars. Let's just see if there's even one here. Okay, here's a decent one. Nearly perfect. Let's see, struggling to find a really good one. I want to show you one that's just perfect. Let's go over to the euro. Let's go over to the Aussie US dollar. We had some of these recently, and now we'll have a good one to show you. Okay, yeah, we got some good ones here. Right. Okay, so let me show you a bullish pin bar. So first of all, this is a bullish pin bar. You see the body of the candlestick is bullish. So all through the day, there was selling pressure and then there was buying pressure into the close, and the buying pressure is right up to the end, the top. You see how the body's full and it's bullish. That's indicating higher prices. The tail is twice the length of the body. And there's space to the left. Do you see how the psychology of this? People were going short, 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 and all those people who are going short have had to cover their positions, close their positions, and they're underwater, so they don't want to go short again. So you can see here space to the left, and that set off some price to the upside. Now you want to use these when you see some good fundamental reasons. Here's another one. You can see price moving higher, 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 over through this overhead resistance, price snap back lower, and you see the body is bearish, so there was selling into the close. You have the wick of the candle twice the length of the body. The body's within the body of the previous candle, and it's bearish, and that triggered off some selling price action. Here you can see that's a very bearish pin bar here. Now we'll go into this, and this could be potentially a great trade, and I'll show you how. That body is below the body of the previous candle. There's space to the left. It's bearish. That is signaling technically lower prices. But here's the key. We don't want to trade this just now. Why? Because we're waiting for the FOMC meeting minutes tonight in about 5 hours. Now, the result of those minutes will send this price one way or the other. What the market is trying to understand, and we'll look at the dollar for this, is how certain is the Federal Reserve about tapering bond purchases. You see this dollar strength that came in the 16th of June? That was on the last interest rate decision by the Federal Reserve. In that interest rate decision, the Federal Reserve board members indicated that they were more likely to raise interest rates and sooner than expected in 2023. Prior to the meeting, they had been expected to raise interest rates in 2024, but at the meeting they said, actually, the data has been more supportive of late, and we're going to be raising interest rates 2023. Now remember, this is crucial, before a central bank raises interest rates, it will taper its extra bond purchases. So this raised speculation in the market that, the Federal Reserve will taper their bond purchases because they're getting ready to start raising interest rates. If a country's interest rate rises, what happens to the currency? It appreciates. So look, since the 16th of June, we've seen the dollar appreciating, okay? And I was taking advantage of this after that last meeting. Now, here we come to the next significant point. We now tonight have the FOMC meeting minutes. So what the minutes will tell us is what the conversation was back then in June. And what the market's trying to work out is this: how serious is the Federal Reserve about tapering bond purchases? Do they want to do it next month, this year, next year? And the answer to this question is crucial. If, and this is very important, if the Federal Reserve minutes show that the FOMC want to taper bond purchases, if they're serious about it, And you can see here in our risk event report in the must-read section on the financial source terminal, I do work here as an analyst providing top material for HYCM clients. And if you are an HYCM client, you get access to this terminal. So make sure you're using that. And you can see here the daily risk event outlook that what we're looking for is if we get a hawkish reaction. So if we see people saying, yes, we want to see bonds being tapered, say, next month. If they say we want rate rises sooner, we want tapering to take place next month, then that will result in in dollar upside, gold downside, and equities falling. Why? If interest rates rise, then that means the debt that companies have will cost more to service, which means their future profitability will be less, so the value of those shares will fall. Okay, so if the market thinks the Federal Reserve is really serious about raising interest rates, then we'll see the US dollar rise because interest rates are coming, so you buy dollars. We'd expect gold to fall because the US dollar will strengthen, so expect falling gold. And we'd expect equities to fall as well. Now, if the minutes come out and it becomes apparent that no, hardly anyone wanted to taper bond purchases, it looks unlikely that that'll happen, then we expect the US dollar to fall, gold to rise sharply. So watch out for this, because gold normally tracks real yields very, very closely. So this is the real yield chart. Do you see how real yields have been falling? Now, when real yields fall, gold rises. Now, real yields is your nominal bond yield, and this is the nominal bond yield here, minus inflation. So do you see how bond yields have been falling? So they've been falling, but inflation has been quite firm. So that means real yields have been falling. So that should result in a lot of upside in gold. But the trigger we need to see, we don't want to move yet, the trigger we need to see before we go long on gold is we want to see if the Federal Reserve is reluctant to taper bond purchases, and if they are slow, then we'd expect a lot of upside in gold and a quick whip up to that 1900 region. But that is only, and I repeat, it's only if they're negative about tapering bond purchases. And then also that would be supportive for equity markets. We expect equity markets to rally higher, and we'd expect some of these commodity risk currencies to move higher as well. New Zealand Swiss franc, New Zealand dollar yen, Aussie Swiss franc, Aussie yen. Remember, these currencies track equity markets very, very carefully. Like if we just put like the S&P 500 on here, do you see rising equity markets, rising risk currencies? Okay, so rising equity markets, rising risk currencies, they track one another very, very closely. So that's a key event to be looking at the meeting minutes. And at the moment, markets are just patient. They're just thinking, you know, see how narrow the ranges are? They're waiting. Before big events, traders don't tend to pre-position just right into the event at that moment. You tend to see very stationary, static price action because, you know, traders don't want to take up the new positions just before the trading event. Okay, so just waiting for the FOMC meeting minutes. Now, another key market to keep your eye on is oil. Now, what's been happening with oil? This has all been about OPEC plus. Now, let me explain. There's been an argument between Saudi Arabia and the UAE. Why? Because the UAE have said to Saudi Arabia, we want to increase our production. Now, Saudi realize if they say to UAE that you can raise your production levels, and in other words, get more money for your oil by pumping more out, that means that other countries are going to ask, well, Russia is going to say, can we increase our production? Nigeria might ask, can we increase our production? So OPEC has said, no, UAE, you can't increase your production. This has resulted in a big argument. So there's been no deal struck at the latest OPEC meeting, and there's no date set for another meeting. We've seen oil prices fall off lower. Now, some of that is just profit taking. If you look here on a weekly chart, some analysts have been talking about $75 being a decent end of year target. So with price going into that $75 region, it was not surprising to see a bit of profit taking. Also, do you see this overhead resistance area from 2018? In fact, price hasn't been this high above that $77 region since 2014. So this is a hugely important level technically. That's why we've also seen a bit of profit taking. Now, here's what to look for. What we're going to look for is this. If the OPEC break down, and if countries say, do you know what? We are just going to produce as much oil as we want, and we're going to have a war for market share. If that happens, expect oil to fall very sharply back down to that 68 region. If there is an agreement with OPEC, then we should expect that to keep supporting prices. The medium-term outlook for oil is strong. Why? Because it's not expected to be enough supply for oil to meet the demand in the second half of this year. Goldman strategists, they say that there needs to be 5 million barrels per day extra needed to stop a critical low inventory level. So later on today, we have some very important data coming out. We have the API weekly crude stocks. Now, this API data is the private inventory levels for crude prices. It tends to track the EIA official data very closely. So this comes out the day before the normal weekly crude EIA data, and it's the private inventory data, but it's a very good indicator of what the level is like. Now, it's 1 day late. Normally it comes out Tuesday night, but because of the holidays in the US, it's 1 day late, and this is what's expected. The expectations are that there's going to be a draw of 3.9 million barrels. So a draw means a reduction. There's been a whole series of reductions. If the draw comes in at greater than 5.16, so if the draw comes greater than 5.16, we expect upside in oil. But remember that the minutes are going to be absolutely crucial here for the FOMC. Because if the FOMC minutes are coming out and it's like the Federal Reserve are definitely going to taper bond purchases, then we expect dollar strength, and that should weigh on oil. So we have to bear in mind there's a number of different factors, and also notice that this near-term trend line, oil has tried to break it to the lows. So if price stays below this region, technically that does open a probable trend change and a potential move lower. So watch out for oil, but they're the key things to look out for, and look out for the FOMC minutes later, because that will impact the expectations for oil as well. Let's just check here. What else is there to be looking at? Yes, FTSE 100. I find the FTSE 100 very interesting. I was looking at some, the UK is set now to open up on July the 19th, and COVID-19 restrictions are set to be largely withdrawn in the UK. Now, Israel withdrew a lot of their COVID-19 restrictions at the start of June, and they are more open. Now, due to their openness, that has meant that Israel is a good test case of what UK can expect. Now, latest data released from Bloomberg shows that those who've had the Pfizer vaccine in Israel have been protected from severe illness, and the protection is 93% effective. So that means severe illness you shouldn't get a severe illness if you've had a double vaccine. 93% effective. So that means the UK is well placed. So when the UK opens up July the 19th, I'm expecting the FTSE 100 to gain back up into that 7,500 region. So I do like FTSE longs, and I do like FTSE longs from any retracements down to that 7,000 region. So I think there's a 500 points here between now and the end of the year. Any retracements lower to that 7,500 region, would expect that to move up into 7,500. Risk can be nicely defined just either below this trend line here. So just using that trend line to measure risk, just stops running below 6,800, and any significant drops lower would be fantastic opportunities. So if we got price, I would be a very interested buyer if we saw price moving anywhere near that 6,400, 200 region would be an even better area to potentially go long. But I'm expecting this gap area to be filled into that 7,500 of those pre-COVID-19 levels. And UK, vaccinated half the population now. So that's one index that's very interesting. But you might want to wait before entering because of the FOMC meeting minutes. And if the Fed is seen to be very serious about raising interest rates, then you'd expect that to weigh on equity markets across the world. And you'd expect some short-term downside in the FTSE 100. It could even go down to that sort of 6,800, 6,600 level if there's a sharp sell-off. But eventually I expect that to be filled up to that 7,500 level some point this year. Okay, folks, I think that's the major events. Is there anything else to look at? I'm just going to check the question and answers. If you have any questions, please do ask them now. Yeah, what about the pound US dollar direction this week? Rajiv, excellent, we'll look at that. Now, remember, the pound US dollar, this is being driven by the pound and the US dollar. Remember our screen at the start. We want to pair strength against weakness. So before we make a decision on the pound US dollar, we want to know which currency is strong and which is weak. Now, the pound has reasons for strength. The Bank of England upgraded growth. They've upgraded inflation. The UK has 180 billion pounds worth of savings ready to be released in the economy. The UK is also got a very strong housing market. Wages are up, inflation is rising. The outlook for the pound is good. Now, Rajiv, here's the question. What about the dollar? Now, and we look at the dollar, we'll go back to the main screen so we can see that the pound is strong. What about the dollar? Well, we're going to find out about the dollar later on, aren't we? So is the dollar going to be strong or is the dollar going to be weak? So Rajiv, this is how you trade. You now know there's reasons for pound strength, but look, there's been reasons for dollar strength as well. So we've seen the pound losing value against the dollar because there's reasons for strength for both of them. Now, when was the pound losing value against the dollar? 16th of June. What happened on the 16th of June? It was the FOMC. It was the Federal Reserve meeting. You suddenly saw the Federal Reserve maybe raising interest rates sooner. So the dollar gained against the pound. So we saw pound US dollar downside. Now, what have we got? We've got the minutes from that FOMC meeting. If the minutes show that, oh, the Federal Reserve, they don't want to taper purchases. They're very slow. That we're not expecting tapering this year. If we saw that, you'd expect immediate upside in the pound US dollar regime. Okay, and I expect a retest of that 1.400 region. Okay, so if the FOMC minutes come out and there's no chance of bond tapering this year, expect upside into that 1.400 level. Now, if the meeting minutes come out and they're read as, oh gosh, the Federal Reserve are going to taper bond purchases at their next meeting for sure, and they're much more hawkish than expected, then this pound US dollar will move down, and next test is that 1.3700 region. If that breaks, then we'll go, that opens up the way to even lower levels. So Rajiv, good. I'm glad. Rajiv, does that help? Can you see what you're trying to do here? And what you're trying to do, Rajiv, is pair strength against weakness. So at the moment, we've got the FOMC meeting minutes that are about to come out. So you can't just jump in very easily. You need to wait to see reasons for that strength or that weakness. So another example, Rajiv, that's helpful is the New Zealand US dollar pair. Now, remember what I said? 3 investment banks in New Zealand, Australia region have all expected the Reserve Bank of New Zealand to increase interest rates by this year. That's very bullish New Zealand dollar. So that gives us a reason for strength for the New Zealand dollar. So remember, we could go, aha, now look, we've got reasons for strength in New Zealand dollar. But what have we got? The US dollar. There's also reasons for strength in the US dollar. Remember, 16th of June, what happened? The Federal Reserve brought forward their interest rate projections. So we've got reasons for strength in the New Zealand dollar and the US dollar. So what we want here is, if the FOMC meeting minutes come out later and like, okay, there's no chance of bond tapering this year, if even the minutes start pushing back against earlier interest rate hikes, then we know the New Zealand dollar is going to gain value against the US dollar, and we'd expect to move up to that 0.7150 region. Okay, so there's plenty of opportunity here for the FOMC meeting minutes. And see, what I'm wanting to do as we move forward for HYCM clients, we're wanting to provide daily webinars where I can show you, what to do day after day after day, what the market's expecting, what that means, a bit like that New Zealand dollar CAD long trade, that momentum trade that I've taken in the New Zealand dollar CAD. Let's just move it, how to actually go about taking advantage of that. Because sometimes what happens is you see these moves and like, it's suddenly the move has shot up, 200 points. How do you take advantage? How do you get back in? Well, I've learned, lots of little skills, tricks over the years to show you how to manage these kind of trades, how to trade with momentum, how to trade on pullbacks, breakouts, the whole range of things. And, it does take years to learn a lot of these skills, and it takes time to learn. So, one of the things we're looking at as we move forward is helping folks particularly interpret those key market events and what they mean, because the meeting minutes are key. The market's waiting for them, and we'll make a decision based upon them. Good, Rajiv, I'm glad that helped. Okay, folks, don't forget, on Monday, I will be back, and we have a week ahead live market analysis on Monday. Do pop by. I'll be showing you the big events that are coming up for the next week, so you can get ready for them. I hope you have a very good rest of the day. It's been a pleasure as always, and I look forward to being in touch. Thanks, everyone. Have a great afternoon. Yeah, thank you, Warren. Thanks, Rajiv. Goodbye. Yeah, thanks, Rajiv, and you.